All right, hello and welcome, guys. It's another week over. Welcome to the weekend video. And yeah, how about I just get straight into it? Um, it hits this point. Well, how about I just get straight into it and then I start talking at a random tangent. But hey, that's me. You know me now. It kind of hits this point on Friday evening and Friday night, and I tend to just my brain slows down rapidly and the decline is precipitous. So bear with me. I hope not to slur my words too much and fall asleep on the keyboard. But I'll try and avoid that at all cost. Reach in and slap me if you hear me slowing down. Just give me a slap in the face, will you? Okay, because I I listened to last week's video and I sounded like I was half asleep, which I was. So in my defense, take that in my defense. Okay, so I'm going to start. I'm going to work backwards today just to mix things up and spice it up in life. I'm going to work from crude back to through the commodities, through the stocks, and back to forex. Alrighty, so here we are with the 4-hour crude chart, and it's looking pretty hairy for crude right now. Short-term chart has a bit of variability still left in it, but I think on the longer-term chart, I think we've hit capitulation and we're about to head down in a third wave, probably a third of a third wave now soon. Okay, so let's get into that. You can see here I've got a 1-2 pattern to the downside. In here, there's another developing 1-2 pattern to the downside. Technically, it's not looking great. We've got this declining trend in both MACD and RSI. Fair enough. It's kind of hanging. Our momentum is kind of hanging around the center line now at the moment. So, it suggests a kind of a pause, obviously, in the trend rather than a change of trend for right now. I think we have hit the turning point, and I think this long-term readings on the 4-hour chart here will start to cluster below the center line. You'll see here on the uptrend, the readings in momentum cluster to the upside. They usually stay between 40 and 70 or 80 in an uptrend, and then on the flip side of that, they will read probably between 60 and 10 on the downside. Then when the trend turns down, so that's what we should expect. Forgive me, with momentum going forward, right? So we see next week, early next week, we're going to get a further test of the 200 period moving average here. So twice we've peaked through, but it's failed. So we've got 2 failures on the long-term moving average here, with a coming third test. If we see a third failure, then I think we can kiss goodnight to the price. That's why next week is marked as kind of marked in red on your calendar. This could be a serious turning point for crude. Okay, so let's move down into the short-term pattern. Okay, so on the short-term pattern, I've shown 2 possibilities in tonight's chart. There's always 2 possibilities. You can never narrow it down to just one certainty. And I'm afraid in life that's just the way it is. There is never one certainty, apart from the fact that you're going to die. But let's not get morbid right now. Okay, so I've got a 1-2 pattern here in grey, and I'm working on a 1-2 pattern in pink. Last night we were talking about a corrective rally in wave 2, and the target was, I think, 6150 or something like that. Why do I get rid of these things? I think the target I had was 6150, so we broke through that target, but the form, or the structure of that rise looks quite impulsive as a 5-wave pattern here. So the first likelihood here is that we've got a wave A, 5 waves in wave A. We'll get a wave B somewhere to a lower high, and then we'll get a wave C to complete wave 2. The other possible alternative here is that we have a larger three-wave pattern, wave 1 down complete, wave A, a wave B, and wave C in a retest of that resistance there at the previous high. So obviously this is not the cash market, this is a derivative market that I work with here. So the actual cash high in wave 2, labeled wave 2 here, was 63.28. So we'll get a retest of that 63.28 in the alternate wave 2 here. So for next week, whichever one of these patterns is correct, it suggests the next move is to the downside. So next week we are watching, first of all, for a retest of this downward sloping trend line off the previous 2 highs. We get a retest of that and a fall away, then we'll stick with the current wave count. If we get a break of that line, it'll lean towards the alternate wave count. So next week looks pivotal. We'll watch for the short-term pattern. Okay, so let's move on to 4-hour gold. I don't think there's any point in looking at 4-hour gold. We've got a 1-2 pattern off the low there. And now we're talking about we are emerging from a large sideways correction, and I think we have a positive reading, a positive Elliott wave signal off the low here, probably complete today if I'm not incorrect, which I usually am, but let's not talk about that. So I think we have a 5-wave pattern up, and going off this evening's bounce off the suggested low of 13.15. I think we got 13.14, but the nice sharp bounce we got off that kind of previous shoulder there does suggest that that was a 3-wave pattern to the downside, which suggests again that it's a corrective decline, which suggests again that we should have a further break of 13.40 to confirm a rise in wave 3. The only sticking point I have at the moment is again, I got to work on that. Got to work on my got to work on my pen strokes here. Is the form of the rally here? I am like, this can be counted as a 3-wave rally also. So that is what I'm kind of most concerned about at the moment. The kind of confusion, or sorry, the possibility of this as a 3-wave rally rather than how I've labeled it as a 5-wave rally. Now, the reason I'm going with the impulsive pattern is twofold, really. The decline is in 3 waves pretty clearly. We've had a nice sharp bounce off the suggested lows, and we have a retest of the previous wave, the high, plus the fact that this larger 3-wave pattern completed nicely within a trend channel, which suggests that it was complete. So we've got like probably 3 or 4 degrees of, or 3 or 4 kind of levels of analysis that stack on top of each other there, which suggests that we will be moving into an upward period pretty soon in gold. So I think next week, again, if we get a test or if we get a clear break of 13.40, then we're all in for a rally in a possibly wave a rally in wave 3 of 1 of, which would be 3 green. So 3 of 1 of 3. All right, let's move to stocks. So here again, next week is looking like a pretty pivotal moment in stocks. Just get rid of that. We have in my book, a pretty clear 3-wave pattern, A, B, and C, in a possible wave 2 there. So if that's correct, if we have a 3-wave pattern into the high of wave 2, then we should be looking for a complete retracement at least into support of 24,223. So that's 25. So we're about 1,000 points down below this. at a minimum. At a minimum. The larger degree concern is that we are now actually complete at 2 degrees of impulse waves to the downside. So we have a 5-wave pattern in wave 1, 3-wave pattern in wave 2, 5-wave pattern in wave 1, 3-wave pattern in wave 2, and then capitulation. Now, it might take another week or so for a further lower degree lower high to develop off this 3-wave pattern here, but suffice to say that we are in Elliott wave terms right on the edge of the cliff, with your toes out towards the edge, and you're looking over, and the wind is at your back, and you're getting unstable right now. So this market could tip over pretty quickly and seriously over the next coming weeks, most likely next week. So let's go down to the lower term chart again, just to show you what I'm talking about here. Where we have a wave 1 and 2 in gray here. So as you can see, again, we have a head and shoulders pattern at a lower degree here. So we have left shoulder, neckline, head, right neckline, right shoulder. So we should be heading down in the next phase of the decline, given if this head and shoulders pattern holds up, which I think it does, and the Elliott wave pattern holds up, which I think it will, and this is actually a 3-wave pattern corrective rally, which I think it is, and we get a further break of support at 24 to 23, which I think we will. From here, I think we should get early next week a kind of a spike lower with a fail at a lower high, which would signal a kind of further wave 1 and 2 in pink to the downside. So that'll be 1, 2 of wave 3 gray of wave 3 green. So we could be moving into a third wave decline, and this decline could be epic if I'm correct here. So the next most likely level of support is this wave 4 in green here, which stands now at 21,706. So below 21,706, a serious support or reasonable support comes in at 21,706. A-OK. So I think next week, watch stocks. This is going to be, it could get very exciting very quickly. Okay, so dollar yen. We've been looking at this possible bottom in dollar yen for the last few days, and we've got a nice, on the 4-hour chart here, we've got a decent clear break of the 50-period moving average here, and we're running up towards the 200-period moving average. We've got a nice higher low RSI, higher low in MACD. We've got 2 central line breaks on both RSI and MACD, and we've got a possible 5-wave developing pattern in the short-term chart. So if this is not the low of the larger degree wave 2 here, well then, god damn it, I'm being fooled on 4 different areas of analysis right there. But I think the odds are that this is lining up to be a pretty significant low in dollar yen, which should be followed by euro dollar and pound dollar. Okay, so let's go down to the 30-minute chart we have here. I think I'll go out to the hourly chart, give a little bit of more perspective. So we have the previous wave 4 here marked. You see this contracting triangle, wave 4. The high reached 107.20, and that is my short-term target for the initial, let's call it initial resistance. It would be a very minor resistance really, but it would be an indication of a definite indication that the pattern is turned to the upside. So we've got 1, 2 in pink off the low. I was a bit suspect about this earlier, but in the overnight session, the market rallied in a possible, let's say, internal third wave of this wave 3 here. So if I was going to trace that out, we'd be talking about 1, 2, 3, possible 4 developing right now, and then a 5 in a wave 3. Early next week, we should, I expect to see a break of 107.20 as wave 3 closes out. That'll probably be overnight Sunday night, and then Monday we'll probably spend the day consolidating. Now, if this is a fourth wave, then we should stay above the previous wave 1. Or sorry, if this decline in a wave 4 comes about, we should stay above the previous high of wave 1, which was 106.46 there. So 106.46 is probably the main area to watch, or the main level to watch early next week. So if we see the completion of a 5-wave pattern at a higher degree here in wave 1, then we'll be talking about we'll be turning very bullish in the short term, rather than, or I would extend, say, my bullish outlook from the long term into the short term very quickly. So at that point, if we get a break of these resistance levels and we complete a possible wave 1, then we'd be looking for a corrective decline in a second wave there to come in, probably reach back into these lows here at 106.50 again in that possible wave 2. So let's actually put in a wave 2 there for the heck of it. No, wave 2. Okay, so for next week, we're looking at these resistance levels here and a completion of a 5-wave pattern to the upside. Okay, so pound dollar. I'm still looking at a possible correction here in pound dollars, still closing out. There is an argument to be made that we have a wedge pattern to the downside here, so the top could be in already, but I am leaning towards the possibility of of one further high in pound dollar before the price actually turns for the long term. Well, so let's not be mistaken about this. I do expect this market to reach a significant high very soon and turn back down into a longer term downtrend again, just like euro dollar, and the flip side for dollar yen. So I'm reading a 5-wave pattern completing to the upside here. So let's go down to the short term chart. So this is the wave 4 that we're looking to close out soon enough. Looks like a triple combination. So we have a 3-wave pattern in wave A, contraction triangle wave B, and then a 3-wave pattern again in wave C. There's an argument to be made that this low here is in fact wave 4 proper, complete. I'm not so sure about that, given that the rise in the rise off that low 137.11 low looks, it does not count as an impulse or a 5-wave pattern to the upside at all. So for next week, for early next week, I'm looking for this final C wave here, C of 4 to close out with minimum target at 137.11, and once 137.11 is hit, we'll be turning our focus to the upside again towards 143 for a completion of wave 5 there. So for pound dollar, short term significant, well, partially significant low in wave 4 to occur likely early next week, with a rally in wave 5 expected. As with all of these things, our eyes are always on the alternates. So there is an argument to be made that we have a declining wedge pattern here, which is unfolded in a wave 1 down, and what we're getting here is a second wave correction to the upside. So we should be able to clear out which is the actual short-term pattern early next week. Okay, so let's go down to euro dollar. So again, on euro dollar, we've completed, I think, 5 waves up in wave 5 of C of B. So we've got a 5-wave, very large degree 5-wave pattern complete in a C wave of a larger B wave pattern. Right now, I'm looking at 5 waves down in 1 and 3 waves up in 2, and this decline back into and below the previous moving averages is looking pretty hairy for euro dollar right now. And on top of that, we seem to have a death cross of the moving averages here. 50 has passed below the 200, plus the fact that we've got on the 4-hour chart declining lower highs in both MACD and RSI, and we've got a bearish signal again today with a bearish cross of the downside cross of the central line there. So if the momentum is shifting, and it damn well looks like it is, if it's shifting to the downside, then we should, again, like I spoke about in crude, we should again see the majority of readings to happen, to shift from above the central line to below the central line as the trend line, or as the downtrend reasserts itself. So let's get down into the hourly chart here and see how this pattern off the high is kind of playing out so far. So there's always an alternate count, so we could be seeing an alternate wave 4 and a possible developing wave 5 ongoing. I think with the sharp nature of the decline on Thursday and Friday here, it's limiting the probability that this alternate count is true. So we've got a push back towards that B wave. Granted, it has not broken yet there at 122.67. That previous low here, the interim low for the week here, and that previous low there. So we've got this kind of shoulder of support here in this 122.50 to 122.60 level there. I think if we get a break at that, it will confirm the short-term count, which would be we would see a 1-2-1-2 develop to the downside, and that could spell disaster for euro dollar really in the longer term and in the short term too. So we've got 1-2 and then a possible 1-2 to complete with the declining lower highs, and we've got this kind of, obviously again we've got this head and shoulders pattern developing, or possibly complete. We have that left shoulder there, neckline, the head, right neckline, right shoulder, and in theory we turn to the downside again. So momentum is looking like it's turning to the downside, a medium-term momentum, the 4-hour chart. We have a possible 1-2 pattern complete off the high, and we have head and shoulders again, and the Elliott wave pattern is suggesting a further 1-2 pattern to the downside is developing. So the evidence is definitely stacking up on the negative side for euro dollar right now. We have significant resistance, or the key resistance there at 125.55, which must hold as this pattern develops. And I think, well, most definitely 124.45 there, that Thursday's high, I think it was, that has definitely got to hold in early trading next week. So if we see a 3-wave, I've shown here a wave 1 and a possible developing wave 2 underway. So if we see a little pop on Monday and a break, a retest or a break of 122.67, that interim support there, well then for me that will cement the pattern in the short term. Early next week we were looking for another lower degree Elliott wave pattern and a possible completion of a bearish Elliott wave signal, and a possible decline in wave would be wave 3 of 3. Okay, so that actually completes it. Wow, I really raced through that one. That completes analysis this week. I wish you the best for the weekend. Stay safe and Godspeed, and I'll see you Monday evening. Bye-bye.